It's been rough sledding for REITs due to spiking yields. However, we've also been getting good news on the housing front. Here to talk about opportunities in real estate is Scott Crowe. Welcome, Scott.
Greg, thanks for having me.
All right, REITs really have been hammered over the past week as rates have moved higher. Is it overblown?
I think it is. Ever since Bernanke uttered the word taper, we've seen a declining REIT market. REITs are down about 20% since he started talking about tapering, and we think it's overblown. That implies about a 12% correction in real estate values. And there's a number of reasons we think that's not going to happen. Number one, despite the fact that interest rates have increased a little bit, debt costs for real estate are extremely low and capital is very plentiful to invest in the property market. Number two, interest rates are increasing for the right reasons, i.e. economic growth. And number three, that's very important given the low supply profile we have in the real estate markets right now. In fact, real estate supply is so low it's barely keeping up with obsolescence. It's some of the lowest real estate supply we've had on record. You can understand why. What lender in his right mind would lend to a commercial real estate developer in this kind of economy? And you can see that if you walk outside, you'll see no cranes. And what that means is the second leg of the real estate story is rental growth, and that's what we got ahead of us.
Well, there's a lot of different stories within real estate. There's shopping mall REITs, there's apartment house REITs. I just want to talk about housing for a little bit and its relationship to what's going on in real estate. We got some good numbers in housing today from new home sales, as well as the Case-Shiller had almost a record-setting month. So tell me your view of housing and how it supports the real estate case.
Okay, I have a short-term and long-term view on housing. I think if you look at what's been happening in the REIT stocks or the home building stocks, the fact that the Case-Shiller is up a lot could be actually a bit of bad news in the short term as we enter the summertime for housing. And that's simply because house prices have increased a lot very, very quickly. At the same time, interest rates have increased. And that's been on the base of a very low level of inventory. So what I'm trying to say here is that affordability has actually declined pretty quickly. And I think if you look at what's happening in the REIT market or the home building market, that's foreshadowing some slowdown as we enter the summer. So that's my short-term view. Notwithstanding that, I do believe we are in a recovery in the housing market. The bottom has been put in. I think that's extremely important for the sustainability of the US economic recovery. Extremely important for investors to be able to take a long-term view on the stock market. And over the next 5 years, I think you'll continue to see a recovery in housing, but it will be choppy and there will be some headwinds.
Well, when Americans' homes are worth more money, they go out shopping, right? And is that why you like Cole Real Estate?
Well, I like Cole Real Estate because they just listed last week into the jaws of the taper tantrum of the market. And they had an awful IPO. They were down 15% the day that they listed. Now, they are net lease retail. And as you said, are underpinned by leases from people like Walmart, CVS, Walgreens. Very long-term leases to very, very safe credits. These assets are going to continue to get bid for in the markets because they yield 7% plus in the direct real estate markets. So I like the business. I like the valuation even more. This is the one part of the REIT market which has been hammered more than everything else. These stocks are down 25% plus. And as a consequence, Cole is now yielding 7% and 12 times cash flow. I don't think the market's also giving them any value at all for their funds management business, which is an excellent franchise. So it's a really cheap, high-quality company.
Let's talk about another REIT. This is Camden. Now, Camden is right outside of Philadelphia, New Jersey, but most of their properties are in the Southeast. Why do you like this one?
Okay, Camden is an apartment REIT, so rental apartments in the Sun Belt, and they have B-type assets. Now, why we like this company is that what we see in the Sun Belt markets is the fundamentals are actually improving more quickly than on the coasts as the economic recovery does broaden out. Now, at the same time, the assets in these markets are much cheaper than, say, here in New York City. This cycle, an interesting dynamic has been that the coastal markets and the big cities have really seen aggressive buying, and values have gone up and yields have come down tremendously. Now, that's not all that unusual in the first stage of a recovery. People go to where it's safe in the prime real estate. The thing that's been unusual this time is it's taken 5 years for the economy to start to broaden out. And that's what's happening in Camden's markets. And for those who are worried about interest rates, an increase in yield is very, very good for apartments because it means there's less people buying and more people renting.
And then finally, Corio. This is a Dutch-based REIT, shopping centers in Europe. Are people shopping in Europe? I hear about unemployment in Europe, not so much about shopping.
People are still shopping, but you're right. Look, you have to be careful in Europe. You want to avoid the periphery, okay, so Southern Europe. You want to avoid development and you want to avoid leverage. Now, Corio doesn't do any of those things. Corio is a high-quality shopping centre owner with long-term leases to high-quality tenants in Western Europe. And it's also very, very cheap. It trades at a 7% yield and a 20% discount to net asset value. So as a bottom-up stock picker, I can put the noise of Europe aside and I can look at this company and I can think, even if there is a lot of macro noise going on, will this company continue to collect rents? Yes. Will it keep collecting its dividend? Yes. Will real estate values hold up? Yes, I think they will.
Thanks a lot, Scott.
Thanks, Greg.
And thank you for watching The Street.